Uncertainty in the U.S. Treasury markets heats up to a fever pitch as they take hard-line defensive positions, basically laying the base ice cream in the sundae. The FOMC lays out confusing and opposite information, or scoops of fudge all over the top, concerning the futures of the federal funds rate. And the cherry on top? You guessed it, the fight over the debt ceiling between Congress and the presidency. In the wings lies China and the rest of the BRICS nations, now attempting to secure Saudi Arabia with the big giant spoon. Is the US laying out a big sundae for our financial enemies globally to eat up? Well, it's beginning to look like the perfect treat on a hot summer's day. But beyond staring at the grand picture, how is this all filtering down to the real estate markets now that market volatility has returned in full force? Will mortgage interest rates reach the sevens again and perhaps stay there? What does this all mean for home ownership? Stick around to this video to find out more. Well, welcome back after that quick break, everybody. Mike Petras here with MPRE Residential, powered by NextHome Treasure Valley, and back with another video to where we're going to go ahead and discuss the just absolute volatility that's happening in the Treasury markets right now, considering that not only is there a fight going over the debt ceiling still between Congress and the presidency, but also there's a lot of uncertainty right now with what the FOMC or the Fed is going to do with the federal funds rate coming up here in the near future. So in the meantime, if you do have any further questions regarding this information, or you are looking to buy, sell, or invest right here in the greater Boise, Idaho area, better known as the Treasure Valley, feel free to give me a call, shoot me a text, send me an email. Would be more than happy to sit down and discuss with you the best options to go ahead and get you right here to the Treasure Valley. Also, if you are looking in to make a move from out of state, please click in the description below, download my free relocation guide, so that way you're in the know before you decide to make the move. Also, please hit that subscribe button below, hit the notification bell so that you're constantly in tune with all the videos that I do come up with, and please give me a thumbs up if you enjoy this content, you think I'm doing a good job, and feel free to comment below. Would definitely love to hear your thoughts, especially on this one, on where you think things are going to work out here in the United States coming up momentarily. But let's go ahead, let's dive in. Let's see how this is all working out and is going to play out here for the real estate market right here in the Treasure Valley and really across the United States. Well, it really is no secret that the countries around the world in the global markets really do not like being under the thumb of the US dollar anymore. Our dollar weaponization, as they like to refer to it. And countries like China are making big moves to go ahead and get out of that pressure of the dollar before the dollar milkshake happens. And as mentioned in this video above, please click on it and find out more. Basically, the United States and our current administration is handing a currency change to them on a silver platter. And how is that happening? Well, simple. Inflation and a non-productive society, coupled with excessive spending and printing of money, all hurting the value of the US dollar. And sanctions placed, which don't work in a war that we don't belong in, shook the world's confidence in our treasuries, as Russian holders had their treasury assets frozen by the US government. A move which shocked foreign investors and basically left the door open for a possible currency exchange. Basically, a solid challenge to the US dollar. All of the above spelling long-term problems for the United States. Pair this with all the current political power struggles over the debt ceiling, have not only tossed the markets into chaos again, but also could really open the door further for a financial takeover, which could leave Americans like me and you broke and desperate. Also, right now, double dosing the markets is the uncertainty about the Fed's next move with the federal funds rate in order to tame inflation. Will they pause the increases or will they put the screws in deeper? All the breadcrumbs recently from the Fed are really resulting in a 50-50. Crazy, ambiguous information that has the markets absolutely running for cover. So, in summary, things are really not looking good for the American economy right now. Basically, a double dose of short-term consequences for the markets that can have long-term consequences. Again, in one hand, a debt default could result in catastrophic consequences for the U.S., especially in the stock market and treasury markets alike. And in the other, the Fed tightening the screws on the federal funds rate can result in the credit crunch and possibly create more bank runs on the banks here in the United States. More bank failures. Plus a credit crunch, which we really kind of are in at the moment, can mean it'll be harder for you to obtain the loan that you're looking for in order to make your home purchase. And if you can get one, it could be much more costly. So in essence, this is a hard point of market volatility that I haven't seen in my lifetime in the markets that could have some very, very interesting stuff popping up. And what's happening to mortgage interest rates as all of this is unfolding currently? Well, they're on the rise, as the defensive market positions have been arising and will continue to arise over this week and maybe even leading into next. So what are some of the broader long-term effects if none of this works out in the right direction? Say, for example, if we go into a default and the federal funds rate gets doubled down, or shall I just say an increase in the federal funds rate? Well, our status as the leader and the world reserve currency of the world could be challenged a whole heck of a lot quicker. And no, this would not happen overnight if it really even happens at all. But what would it mean if it did? Basically, the financial destruction of the US as we know it today. And of course, if you have any further questions regarding any of this, please feel free to reach out to me or comment below. Would definitely love to hear your thoughts on this. But if you are unfamiliar, I do implore you to go ahead and do your own research. See what's happening for yourself. However, if things go right this week and leading into next, it would mean a couple of things. One, Congress and the presidency come to agreement on the debt ceiling, and how I do agree that the budget should stay in the budget legislation session. McCarthy's hardline stance in this instance is really the right one. But why? Well, he is trying to stave off an administration that likes to spend money that we don't have, like water.
Come on, man!
To a political end that I think we all know. Second, the PCE data would have to show numbers that show that the Fed's fight against inflation is actually working. Again, in its battle against inflation. Should that happen, to the hopeful delight of the Fed, then a pause is inevitable. But we'll not know this until this upcoming Friday. If these two things happen, then that should be able to calm the markets and what's going on and be able to kind of bring a sense of normalcy back to everyday American life, and especially the real estate markets. However, if things go dramatically wrong, a default would result in shaking our status as the world reserve currency. That would set an obvious precedent, meaning that a nation that guarantees its returns to the markets in a free enterprise now doesn't, further opening the door wide open for a currency challenge. And if the Fed ends up raising the federal funds rate once again, I already did mention early in this video what could be the consequences of that. So again, in the short term, and according to real estate and the markets, if the Fed did this, it would mean more costlier and harder to obtain loans. So hang on to the seat of your pants, everyone, this week, as the markets are doing. So right now, and since the markets are back into a defensive position, what is the defensive position doing to mortgage interest rates? Well, you guessed it, they're on the rise. And why? Because the yields are on the rise as people holding Treasury securities are selling them off. And as we know, when the yield goes up, so do mortgage interest rates. In fact, the yields had a breakout. No bueno. So will mortgage interest rates rise back into the sevens? Well, they officially have, as of the time of making this video. However, will they stay there? Well, that really depends on what happens this week and into next. If we default, the answer to that question is obviously no. In fact, if we default, mortgage interest rates will skyrocket as a Treasury sell-off occurs, and probably in mass quantities not seen before in US history. But if we don't, then we can expect investor confidence to return and mortgage interest rates to go down as buyers return to the Treasury markets. However, say if we don't default, which is the most likely outcome, but the PCE data doesn't come out favorable, it would become almost certain that the Fed would raise the federal funds rate again. As a result, investors will sell off their treasuries and the mortgage interest rates will rise. This time, and in this scenario, with mortgage interest rates staying in the 7s and probably for some period of time. But if the PCE numbers come in good and the Fed places a pause, then mortgage interest rates should come in lower. The best possible outcome is no default and no rise in the federal funds rate. However, and as we know, the housing market is very sensitive to mortgage interest rates. And the current state of the housing markets really stays in its delicate balance, especially right now. So again, we shall see. So to quickly recap, there are multiple situations that can happen this week following into next. And most of them are probably likely to have a good outcome. For example, with the debt ceiling default outcome most likely not going to happen. Because I think Congress and the presidency really kind of know the disaster that could happen for the United States if it did. So in my humble opinion, I really think the question here is, what is the Fed going to do at their next FOMC meeting? Well, unfortunately, we'll know more on Friday as the PCE data comes in. So, what do you think? Will the US get past all the bull and continue on path? Or will the floodgates be opened? Please comment below. Would love to hear your thoughts on what you think is going to happen. And as always, we shall see. Well, and if all comes crumbling down, owning a home is actually an asset. And in some cases, even if we lose our status as the world's reserve currency, that asset of home ownership may prove a safe haven. And worthless dollars could pay off your home a whole heck of a lot quicker than in a healthy economy. But did I say that? But hey, let's go ahead and not tackle that yet. In fact, that's probably not going to happen. But again, we shall see. But of course, if you are looking to buy, sell, or invest in real estate right here in the greater Boise, Idaho area, better known as the Treasure Valley, then please feel free to give me a call, shoot me a text, send me an email. Would love to come up with the best game plan to go ahead and get you right here to our area. And of course, if you are looking to make a move from out of state right here to the Treasure Valley, please feel free to click in the description below and download my free relocation guide so that way you're in the know before you decide to make the move. Also, before you go, please click that subscribe button below, hit the notification bell so that you're constantly in tune with all the videos that I do come up with, and please give me a thumbs up if you enjoyed this content, if you think that I'm doing a good job for you. And also feel free to comment below. Would definitely love to hear your thoughts about what you think is going to happen in the future. And I'm also very responsive to any questions that you may have coming across via that. So I do look forward to the day that we speak. I look forward to the day I call you my neighbor. God bless. Until then, thank you so much. Bye-bye.